Hey guys, so in today's video, I'm going to be giving you a breakdown of this beautiful 1 to 3 risk to reward trade that we took on USD just last week. Now, not only was I able to take this trade myself, but I also sent it into the VIP group, so all of us were able to take it and profit together. So I'm going to be giving you a full top-down analysis, breaking down the higher time frames, the lower time frames, the entry, everything from top to bottom, all you need in order to become a consistently profitable trader and start taking these A+ setups yourself. So first and foremost, we're going to jump up to the daily time frame so that we can really understand what's happening with this entire market structure. When we start off on the daily time frame, what can we identify? Well, first and foremost, we can very clearly see that we are heavily in a bearish trend. We've been putting in a series of lower lows, lower highs, lower lows, lower highs, and lower lows. This tells us that we are bearish and we should only be looking for short positions, because if we get into a buy, then that's going counter trend. And as they say, the trend is always your friend. So now that we've understood that the daily is bearish and our bias is also bearish, we can now drop down to the 4-hourly time frame, and this is where we can start to identify key areas of interest so that we can potentially start to take a trade. Now, I really want you to focus on this piece of price action right here, because it is going to play a crucial role in our analysis later on. So what can we see? Well, we've had this lower low be formed, then we had this lower high, and then price put in a brand new lower low. After that, we had a liquidity sweep of this previous lower high, where we just swept all of the liquidity that was just above it, and then we absolutely just plummeted to the downside. So I really need you to remember this, because like I said, it is going to come into play later on down the line. So once we've seen this liquidity being swept, we've then had a break of structure. So again, this is confirmed that we are in a very heavy bearish trend, and that we are putting in a series of lower lows and lower highs. So then what happens? Well, once we've put in this lower low, we then go and put in this lower high, and then we put in this brand new lower low. Now, whilst we've done that, what have we also done? We've created a trading range. So if we come down to the 1-hourly time frame, this range is going to make a little bit more sense. So as we can see, price has put in this lower low, lower high, and then a brand new lower low. So what this means is that everything that happens inside of this lower high and this lower low right here, anything that happens inside of it is simply just a complex pullback. Now, if you don't understand what a complex pullback is, or if you don't understand how to read market structure, or even have a proper trading strategy of your own, then click that link down in the description so that you can become part of the VIP group, where I'll teach you everything that I know from A to Z so that you can start taking these trades for yourself. Now, once we've identified that we are inside of this complex pullback, we're not going to take any trades until we either get a break to the downside, signifying a continuation of the bearish trend, or we get a break to the upside, signifying that we've had a market structure shift and the markets have flipped from bearish to bullish. Then we will change our complete bias, and then we will start looking for longs. But at the moment, that hasn't happened. Now, on the hourly, we've identified that we're inside of this complex pullback. So what do? We now drop down to the lower time frame, which for me was the 15-minute. And now on the 15-minute, we can now start to identify the structure that is being built up here. Now again, we've got a lower low, lower high, and now a brand new lower low. Remember that we've also got liquidity resting above this previous lower high, exactly the same as the 4-hour time frame. Remember, I told you to keep that in mind. So now the exact same thing that has happened on the 4-hourly time frame is now kind of happening on the 15-minute time frame, where we've got this liquidity, we've had a breaker structure to the downside. So now if we anticipate that price will come back up, sweep that liquidity, give us a break of structure or a market structure shift to the downside, we can then take a trade going to the downside in line with the higher time frame trend. Again, the same fractal thing that we identified on the 4-hourly is the same fractal thing that we're waiting for to happen on the 15-minute time frame. So if I continue to play price on, remember that we have just had a break of structure on the 1-hourly time frame. As we can see, if we go back up, we've just broken below this complex pullback that we were in, and we've put in a brand new lower low. So what this means is that our trading range has actually changed to this now becoming our brand new low. So if I remove this, this is now our brand new low. And then this has become our brand new high. So that means our trading range is between this lower high right here and this lower low. So anything that happens in between this is just a complex pullback until we get a breaker structure to the downside, signifying a continuation of the bearish trend. I hope you guys are still with me. So continuing to play price on, what can we see? Price then comes up, and what does it do? Gives us a sweep of that liquidity. right? I told you guys to remember the 4 hourly time frame. It gives us a sweep of the liquidity of the previous lower high, and then what does it do? If we go down to the 5 minute time frame, we can see that again, this structure is creating a series of higher highs, higher lows, and higher highs. That means we need this low to break in order for us to get a market structure shift, signifying that the lower time frames have flipped from bullish to bearish, and then we can take a short position. So now we've got step one of our trading checklist where we've had the sweep of liquidity. Now, what's also interesting is if you guys have watched my previous videos talking about the Judas swing trading strategy, what you can see is this blue box identifies the Asia session range. Now, the Asia session high was right here, and look what's interesting. We've not only swept all of that liquidity above the previous lower high, but we've also swept the Asia high liquidity. So that means we've got two confluences stacked on top of each other. So if we now get a market structure shift to the downside, that is going to be giving us a hell of a trade, which is going to definitely take us lower. Why am I saying it's definitely going to take us lower? Because we've confluence stacked. If this trade was to actually go against us and we lose it, I would be more than happy to take that trade because it followed my trading plan to a T. For me, this is a A+ setup. So now that we've understood all of that, we've identified the higher time frames, we've identified the lower time frames, all we're simply waiting for now is a market structure shift. And we get that right there. We get the break of structure or the market structure shift to the downside where we've had a higher low, higher high, and now we've put in a lower low. That means we can now safely get into a position on the lower high and then ride it all the way down to a brand new lower low. Now, this isn't where I got into this trade, and the reason for that is because I was waiting for a confirmation entry. So I wanted to see price come up and then give us a break of structure to the downside again, which it does right here. So what can we see? We've had a lower low, lower high, and then a brand new lower low. So now that we've had the confirmation that the trend is continuing, I then identified this order block right here. And this is where I was taking my entry. I put my stop loss just above this high because if we break above this high, that would completely invalidate the entire trend and we would no longer be bearish. That means we should no longer be in this trade. And for my targets, I was targeting the low of this entire range so that we can go ahead and create a brand new lower low. Now, look at this. We've got this structure being built, this schematic, where we've had a buildup of liquidity, we've had a sweep of that liquidity, a market structure shift, and now we're about to go lower. Now, if we zoom out, what's interesting is that on the 4 hourly, as I told you guys earlier to keep in mind, we can see that right here, the exact same thing happened. We had a sweep of that liquidity right there up at the top. And then what happened? Price absolutely plummeted. So the same thing that happened on the 4 hourly is now happening on the 15-minute time frame. And now that we've identified where our entry is going to be, this is actually where I sent the trade into the VIP group. As you can see right here, USD JPY sell limit, so that everyone could get into this trade with me. So now that we've understood the higher time frames and the lower time frames, all we simply do now is wait for price to come back, tap us into this trade, and then it starts plummeting, right? So it starts diving in our direction that we want it to go in. We're floating heavy in profits. We're about 2.25 or 2.5% in the profit at the moment. However, we have to understand that price will always retrace, right? Nothing ever drops or nothing ever goes up in a straight line. So what can we see when we come out and we zoom out a little bit on the 1 hourly time frame? Well, we've just had this lower low, lower high, lower low, lower high. So now price cannot simply just dive straight to the downside because just like every single time, price has to rebound before continuing. So I knew that we would get some sort of a pullback. As we can see, we've also got this nice order block, this nice fair value gap that price can potentially come back up into, taking out all of the people that have already gone break even too early and then continuing to drop. And what can we see? Price does exactly that. It comes back up, takes out all of those people that had their stop losses at break even. And then this was actually Good Friday in the UK. So we had a lot of banks on holiday. We had a lot of people on holiday. So price action was very, very choppy. However, as soon as we opened on Sunday night, as you can see, price absolutely just plummets straight to our take profit. So we understood that we didn't go break even immediately because price has to rebound. Price then was a little bit stagnant due to a bank holiday, which we also understood. And after that, as soon as markets opened, price then just absolutely plummeted straight to our take profit. So we understood the higher time frames, we put that in conjunction with the lower time frames, and we framed up a plus setup, and we looked at the fractal nature of the market, where the exact same thing that has happened on the 15-minute also happened on the 4-hourly time frame right here. So having understood these schematics, you can start to pick up on them so that you can start capitalizing on these trading setups. So again, if you guys don't understand anything that I've said, or if there's anything that you're struggling with, click that link down in the description to become part of the VIP group, because you will find a lot of knowledge that will really help you on your trading journey. But that's pretty much going to wrap it up for this video. If you did enjoy it, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.